I called it. Right here on Smart Stock Sam, I told you that Palantir was coiling at the $135 level, that the institutional money was quietly loading up behind the scenes, and that when the trigger finally got pulled, this stock was going to explode in a way that most investors simply were not prepared for. And it did explode remarkably. While the broader Nasdaq was logging its worst week since October, Palantir surged 15% in just 5 trading sessions to close at $157.16. You are watching Smart Stock Sam, and today we are breaking down exactly why this happened exactly as predicted, what the chart is telling us right now, and most importantly, where Palantir is heading during the critical week of March 9th through March 13th. Because here is what the vast majority of investors are completely missing right now. This is not just a bounce off a support level. This is a Category 1 asset undergoing a historic repricing event. We have a hidden shift in institutional ownership that is fundamentally changing the entire risk profile for the month of March. We have a geopolitical war trade that is supercharging Palantir's value proposition in real time. We have an options battlefield that is setting up a potential gamma squeeze, unlike anything we have seen in this stock this entire year. And we have a short squeeze scenario developing quietly underneath the surface that could send this stock to $170 almost overnight. Stay with me for every second of this video, because by the end, you are going to understand exactly what the smart money is doing right now and why the window to position yourself may be significantly smaller than you think. To understand where we are going next week, we first have to look at how this stock completely shattered the laws of gravity over the last several trading sessions. Look at this divergence. While the Dow was reeling from escalating war fears and the Nasdaq slid over 1%, Palantir did not just hold its ground, it exploded to $157.16. This is what professional traders call a textbook breakout. The market is no longer treating Palantir like a risky software play with uncertain fundamentals. They are treating it like a safe haven during geopolitical volatility, the same way gold gets bought during a crisis. But here is what is remarkable. This did not happen by accident, and it did not happen overnight. It all started with a very specific test that I have been tracking closely for weeks on this channel. In late February, we saw what I call the test at the $135 level. That was the launchpad that set everything in motion. On March 2nd, the floodgates opened. We surged to $140.77 at the open, cleared the $142 breakout target within minutes, and hit our secondary target of $145 by the closing bell. This was not retail hype driven by social media. This was surgical price action triggered by massive institutional buying momentum. Every single level I laid out played out exactly on schedule. But the question that every serious investor needs to answer right now is this: why did the momentum shift so violently and so suddenly in the first week of March? What lit this particular fuse? The answer lies in a conflict thousands of miles away that has fundamentally altered Palantir's value proposition in the eyes of the most powerful institutions on the planet. The escalating conflict between the United States and Iran has cemented Palantir as the premier provider of digital defense infrastructure in the world. This is the war trade in its purest form. During recent military strikes, Palantir's Maven Smart system was reportedly deployed to identify over 1,000 strike options on day one alone. Think about that for a moment. 1,000 strike options, real-time targeting and battlefield analysis at a scale that was simply not possible before this technology existed. This is not just software, this is a geopolitical necessity. And do you know what the most remarkable part of this entire development is? At the exact moment Palantir was scaling up its defense footprint, their biggest competitors were getting escorted right out of the building. In a move that shocked the defense technology world, the Pentagon issued an immediate ban on Anthropic's Claude AI for military use. Some bears tried to spin this as a mild negative for Palantir, arguing that they would have to rework certain code to replace Claude-integrated components. But the market saw the bigger picture instantly and reacted accordingly. This is a massive net gain for Palantir. Think about what this really means. The government is aggressively consolidating around trusted, cleared, and fully compliant partners. By removing a major AI rival from the classified field entirely, the Pentagon has effectively handed Palantir a competitive vacuum to fill at exactly the moment their pipeline is accelerating. Could there be any realistic scenario where the government reverses course and reinvites a competitor back into that classified environment in the near term? Almost certainly not. This clearing of the field is a generational win for long-term holders, and the private sector numbers are about to take your breath away. If you thought Palantir was just a defense contractor dependent on government budgets, think again. United States commercial growth just hit a staggering 137%. Overall revenue is up 70% year over year. Their artificial intelligence platform, known as AIP, is scaling through the private sector like a wildfire moving through dry brush. This commercial explosion proves that Palantir has cracked the code on making AI genuinely useful for enterprise businesses. Not a chatbot experiment, not a glorified search engine, but a real operational platform that companies are building their entire decision-making frameworks around. They are building an operating system for the modern economy. And the reason nobody can realistically catch them comes down to a legal and technical fortress that almost nobody in the retail investing community is talking about. This is what I call the impenetrable moat. Palantir holds the Impact Level 6 authorization. In plain, investor-friendly terms, they are authorized to operate inside the most highly classified cloud environments in existence today. For any startup or generic software company to reach this authorization level, it would require years, potentially an entire decade, of rigorous security vetting, audits, personnel clearances, and background checks at every layer of the organization. This creates a barrier to entry that is virtually impossible to replicate on any reasonable timeline. While competitors are fighting over medium-barrier commercial contracts, Palantir sits completely alone in the inner circle of the classified world. There is simply no shortcut to this position. But none of this matters if the smart money is not actively backing it up. And they are not just backing it, they are hoarding it. Institutional ownership has officially pushed past 61%. Wall Street titans like BlackRock have increased their positions by over 5%, while Vanguard and State Street continue to accumulate shares at every meaningful dip. These are not short-term traders. These are the institutions that defended the $135 floor and stepped in aggressively at $126. When you see this level of smart money accumulation, it signals one very clear message: the floor is rising. The big institutions are no longer debating whether Palantir is a winner. They are debating how much they need to own before the next major leg up begins. And the analysts who were most skeptical just a few months ago are now being publicly forced to completely rewrite their thesis. Wall Street is being forced to reprice this breakout in real time. We have seen a wave of aggressive upgrades rolling in. UBS moved to a buy rating with a $180 price target. Rosenblatt hiked their target to $200, and Citi is maintaining a street-high target of $260. When analysts start chasing price action this aggressively, it creates a self-fulfilling cycle of institutional buying pressure that compounds on itself. But let us get fully tactical, because the last 48 hours of price action told us something critically important about the immediate near-term setup. The last 2 trading days were a masterclass in pure bullish control. On March 5th, the Dow plunged over 600 points, yet Palantir absorbed the profit-taking and held the $150 psychological level without flinching once. Then, on March 6th, while the rest of the software sector was bleeding red, Palantir staged a powerful 4.72% intraday recovery to close at $157.16 on massive volume of 74.5 million shares. Every single dip was met by an institutional buyer ready to absorb the selling. That is not weakness. That is distribution from weak hands directly into strong hands. And for the trading week ahead, this creates a very specific tactical opportunity that you need to understand. The technicals are pointing to what I call a coiled spring setup. The optimal tactical entry window sits between $152.50 and $155. If the stock retests these levels early in the week, that is not a warning sign. That is the market reloading for the next breakout. To see the real ceiling for next week, though, we have to examine the options battlefield. We are facing a massive call wall sitting at $160 with over 28,000 contracts stacked right there. On the other side, we have a strong put wall at $155 and a psychological floor sitting firmly at $150. The stock is currently boxed in, but when boxes like this break, the move is almost always violent and fast. If we break that $160 ceiling, brace yourself for the gamma mechanics that come next. Breaking $160 would likely trigger an immediate gamma squeeze. Market makers who sold those calls would be forced to purchase the underlying stock to delta hedge their positions, creating a mechanical feedback loop that pushes the price rapidly higher. Our first upside target after the breakout is $165. But if the institutional momentum holds the way the accumulation patterns are suggesting, we are looking at $175 as the next major resistance zone. And that could happen faster than nearly anyone is currently expecting. There is one more factor sitting underneath all of this that could transform this rally into an absolute vertical move. The shorts are in serious trouble right now. There are over 51 million shares held short, and with current trading volume, the days to cover ratio sits at less than one full day. That means if the price spikes sharply, every short seller in this name has to scramble to buy back their shares simultaneously, creating a cascade of forced buying that builds on itself. With nearly 50% of the total volume happening off-exchange in dark pools, a volatile short squeeze could catapult this stock toward $170 plus almost instantly. The bears are completely trapped. The bulls hold every key. Before I give you the final verdict, I want to be transparent with you as I always am here on Smart Stock Sam. Everything discussed in this video is for informational and entertainment purposes only. This is not financial advice, and nothing here should be construed as a recommendation to buy or sell any security. Investing in individual stocks carries significant risk, including the potential loss of your entire investment. Always conduct your own thorough research and consult with a licensed financial professional before making any investment decisions. Past performance and analyst price targets are never guarantees of future results. Palantir is no longer just a stock. It is undergoing a full-scale major repricing event in real time. Between the unprecedented institutional accumulation, the impenetrable technological moat, the geopolitical war trade, the commercial revenue explosion, and a short squeeze coiling tighter every single session, we are watching the birth of a new standard in enterprise artificial intelligence. While $157 might feel elevated to some investors right now, the street-high target is $260. We are still in the early innings of a massive structural move that is only just beginning to gain momentum. Stay disciplined. Watch the $160 level like a hawk, and remember, every dip into the 152 to 155 range is the market handing you an opportunity. Now, I want to hear from you directly. Drop a comment below and tell me, do you believe Palantir breaks and holds above $160 before the end of next week, or do we consolidate first before the bigger move arrives? I genuinely want to know your thesis. If this analysis delivered real value for you today, hit the like button right now. It makes a meaningful difference in helping Smart Stock Sam reach more investors who need to see this kind of research. And if you are not already subscribed, click that subscribe button and ring the notification bell, because coming updates are going to be even interesting than this one. I will see you in next one.